Hi, good morning, good day, wherever you are. It's Thursday, 2nd of August 2018. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinar. This is Real-Time Daily Trading Ideas every business day to the same time. Welcome, and we will start like all the time with our business disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits if you're a professional client. If you are a retail client, welcome to the new ESMA regulation. Now your maximum risk is your account balance. But whatever you do, trading is risky because the leverage effect multiplies your profit chunks, but also risk chances. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find all about that written down there. Also, the key information documents, the kits, you can find on our web pages if you'd like to read them. Yeah, from ESMA regulation from August 2018 at all brokers, not only at Admiral Markets. It's important to know that's a different regulation now in force about retail clients and professional clients. More about that, of course, you can read on admiralmarkets.com. Here's some more information about that. If you traded before August 2018, the DAX 30 CFD, and the DAX was quoting about 12,000 points. You just need 24 euros for margin requirements. New, you will need as a retail client 600 euro. Same is for euro dollar. You see it on the picture. But if you're a professional trader, you can apply for the professional client status and then nothing has to change. Like that, there's a small difference between the regulation and the protection. Retail clients will get an unlimited protection against negative balances. And if you are at Admiral Markets, you get our negative balance protection policy, a protection up to 50,000 British pounds against negative balances. Check all the details out on the link here on our webpage. Or if you have some questions about that, feel free to ask live in our webinar or call our colleagues from your local customer support. This is me. My name is Jens, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. Usually on Thursday, it's Marcus' day. But Marcus is in a small holiday, summer holiday now. So that's why we have Jens Klatt, a colleague who will make the Urlaubsvertretung. Don't ask me for the English word. And on Friday, it's DAX day. So the substitute for today will be Jens Klatt. And a couple of seconds later, you will see a picture of Jens. Our leading day traders live every business day, but in holiday season, sometimes a replacement. So, and of course, if you'd like to trade Forex and CFDs, many benefits only with us. For example, euro dollar or DAX 30, typically just 0.8 points or pips spread without any additional commission. Also that, check it out on admiralmarkets.com. Also, our contact details are to find on admiralmarkets.com. You can call us, you can send us email or visit YouTube or Facebook. Everything is linked from there. So also regulatory background you will find there. And enough from my side. This is our main moderator instead of Markus Gabel. Jens, good morning, good day. What's your view on the markets today?
Yeah, hello and good morning also from my end. So click, there we go. Yes, thank you for the warm welcome and the nice introduction. Yes, so over the years, I decided not to take any vacation during the summertime. That has mainly to do with the fact that the moment traders are out of the office, usually volatility returns. And if you look at the DAX today, this is exactly what you get to see. So I take vacation usually when no one wants to take vacation. And yeah, so I'm really happy to be here today. The only thing is that something I can already tell you right here is today we have no trade in the DAX so far. Yesterday we had the ESMA special. And I presented there a practical example of how to trade this open range setup here and how it affects or how it is affected that way by the ESMA decision. Today, yes, obviously we could have traded this setup too, even though I stepped back from it, and I will give you an idea of why I did that. Before, I'd like to share an article which was published already yesterday. No, it was yesterday was Wednesday. I think it was already published on Tuesday. It was, or it can be found on the website from Admiral Markets here via the tab Analytics, and there the traders block, and there you have trading the DAX 30 CFD with the open range breakout strategy. So I will share the link here in the chat box, and I've shortened things up, by the way. So it's DAX ORB, it's open range breakout, and you can find all the details here around this strategy described within this article. So and also a practical example, in this case from the 5th of July. But it's all the time the same thing, that you wait for an open range to build here, which you can find, or you have to define it between 8 a.m. and 9:05 a.m. CET, and then you identify the advantage based on a 5-minute exponential moving average 50. Simple version is you trade above, we go long, and only long. If we trade below, we only go short. And then we trade the break of the open range in direction of the identified advantage with the stop above. In case of today, it's above because we are trading the short side, would trade the short side, let's put it that way. Stop above the high of the range, which means that this equals to 1R then. So we take the difference. For today, we will see it's 85 points. So 85 points equals to 1R. And then we have a take profit level, which is 2R away, in this case, 170 points. And now you can already see probably where my words will lead, even though this looks promising here. And by the way, we have a trade going. This is something I'll introduce to you a little later. That's on Euro-Japanese yen, but let's first have a look here at the DAX. The thing is that in the morning we started out quite bearish, and some of you might know that there is a pre-market opening in the future DAX. So Xetra DAX started. This is when the main trading hours start with the main volume. It starts at 9 a.m. German time. This is so-called the Xetra Open, while there's already some trading taking place between 8 and 9, which takes place via the Eurex, the FDAX. And so within this hour, this time span, most of professional traders start to position themselves. You can see some pushes away from the open at 8 a.m. And so now the thing is that today there was not only just a push away from the open, which was nearly around 12,600 points here, but it was more that, 12,700 points, but it was more that the DAX just pushed in one direction. And what you can see here is that it lost those 80 points within within the first hour of trading. So 85 points were lost here. So the market opens, and usually this is the signal then. And with the closing of the candle at 9 a.m., the lower pink line here in this case, so if we trade or break out of the range then, which we defined with the high and low within this time span, and trade below the blue line, this is the exponential moving average 50 on a 5-minute time frame, we have a short trade. So I decided not to take this signal. That has purely discretionary reasons. And why do I do that? Well, the thing is that the market has already built a range here of 85 points, and usually you do not get to see a straight follow through, but the market usually tends to pull back from here. So this is at least the idea. The only thing is that this did not happen here, but the market instead pushed lower, another around 50 points, then saw a pullback, quite sharp one, even though it doesn't look that much, but we are talking about 60 points within 20, 25, 30 minutes here. And then we fall again and make lower lows from here. Now, nevertheless, the thing is that I'm still expecting at least kind of a consolidation or a push back here towards this blue line, something you could usually see many times. By the way, this is the trade from yesterday. And what you can see is that after we fell below this line here and we pushed back, we found resistance in this case. The same is true for the long side, by the way, finding support if it pulls back to this blue line. You find in the region around this blue line a potential trigger for short engagements. And if the market, and this is now getting a little difficult, so we have to scroll too far into the past to find a similar market environment, but just believe me, the moment the market pushes straight in one direction, and we're talking about 150, sometimes 200 points, the market usually tends to at least consolidate and wait for the blue line to come back to the price here. So that means that the market then shows something we call a regression over time, consolidation. This means that over time, in this case, oversold mode starts to reduce itself here. Or the market tends to push back to the blue line. So there's two options then. If the market pushes too far away from this blue line, it consolidates and waits till the blue line returns to the price, or the price returns to the blue line to some extent. And this is exactly the reason why I step back from a setup here, because now the thing is, if you're going for a direct break, and even though right now it looks promising, but this is something you just do not know when the market presents itself shortly after the open. That should be clear. So right now, I'd like to be short, sure, but chances back here 2 hours ago were that the market will push back and at least correct most of those losses of the 85 points within the first hour of trading. So the thing is now, we don't have a trade. The question is, what can we do? And therefore, the thing is that we have to be a little patient. What do I mean by that? Well, I just snipe it and try to show what I'm waiting for. So the thing is that currently, if the market now keeps on falling, or no, not the market, but this blue line continues to drift towards the price, that here the former lows, which can be found at 12,550, oh, that doesn't look so promising. I just hope that you can read what I'm just trying to write down here. So 12,550, okay? So now what I want to wait for is this pullback towards those lows, and hopefully those lows then coincide, or such a retest of these lows coincides with the blue line trading within this region here too. It doesn't need to be on point, by the way, so it can be plus minus 10 points, no problem with that. But just that we wait for such a setup to happen here, and then we try to take the short side and place our stop here at this level, which can be found at 12,608, I think. Let me just see it. So, yes, 608. This is, where's the snipping tool? Here, 608, 1268. You can already see that, obviously, we are talking still about 58 points. Nevertheless, I think with a short against 12,550, and the stop, by the way, this setup will be presented a little later on with outlook on the Bank of England decision here. Let's call it the DAX momentum setup for today. We have the entry short 12,550, but let me just see whether it's really 550. In fact, it's 557 here, 57. So then we have the stop as set as 608. There we have risk of 51 points. And then we go target, and this is something which could be kind of difficult, but I'd go for 380 today. So you can see that with this opening here, potential reward in this case, it's not nearly 170 points, right? Yes, 177. You can see that I'm very, very bearish for the DAX right now, and this has something to do with developments we see over at the US equity markets, especially, and here especially in the Nasdaq. So after the Nasdaq here with the FANG basket, let's call it, and after the results of Facebook and Netflix disappointed, while Amazon and Apple were very positive. Apple was on Tuesday after markets with a very solid result for the second quarter of 2018. The thing is, there's no more surprises out there. But so far, the FANG basket and especially Amazon and Apple, and by the way, Apple's still eyeing a market capitalization of 1 trillion as the first company in the whole world ever. So now there's no big surprises out there anymore. And I think trade war fears start to come back now, with some talks probably going on behind the scenes between the US and China. But so far, we have to say that it doesn't look that promising. And especially Europe could be the next target, even though there was this meeting between Juncker and Trump last week on Wednesday. auto tariffs are still, also tariffs for the automobile sector from the European Union are still on the table. And this is something which weighs definitely more heavy on the DAX right now. So, but this is not the main driver for such a bearish outlook from my end here for the DAX in the upcoming hours, but it's more that I say the market has probably become too, how do you say that? It was just ignoring such a fact. So when looking, for example, at the Dow Jones, you can see that there was an easy recovery, and we made it back above this blue line, which is the 200 simple moving average, pushed significantly higher. And by the way, it's not even the case that if we get to see a push now back below 25,000, that things start to somehow turn sour, or that the outlook darkens here. But all in all, we can say, okay, there's some potential for a deeper corrective move, even though the market still looks quite solid in the US here in this case. So even if we trade below 25,000, a sharper drop, intraday drop, stronger trend on the downside should be expected below 24,900 points. So I think things are still okay. Nevertheless, it could get ugly quite quickly. Let's put it that way. And the reason for that is, and therefore I've prepared something here, the VIX here is currently pushing back. Also, by the way, this is the 1 day now. I want to show you the VIX on 1 year. The VIX here is currently trading back towards its level it has seen here shortly before we saw this huge squeeze in volatility in February with a flash crash in the Dow Jones and so on. And by the way, saying that, have a look at the commitment of traders report. Even though the data is from last week, it hasn't changed that much over the last days, I think. And this is something we'll get to see tomorrow then from the CFTC in the commitment of traders report. What we look at here is the large speculators, the green line. The green line shows that those market speculators, by the way, here you can see, for example, also asset managers, these are included here within this green line, but also leveraged funds, which are extremely volatility short here. So what they do is they sell volatility, and they sold it to a level and are positioned aggressively short volatility here, similar to shortly before this spike in February. That you can see it there. There's 86,000 contracts currently net short. Last time we've seen this reading, that was here. That was here shortly before the squeeze happened in February. So the market is currently not expecting big moves to happen, but now with no surprises out there anymore, and again with the summer here, vacation, markets are very illiquid and thin, chances are high that this volatility spike could occur rather sooner than later. And probably European trading or European markets already show that this is already and only just the beginning, and there could be plenty of more bearish action to come, especially, by the way, if the NASDAQ, I haven't prepared the chart yet, but have a look yourself. Look at the NASDAQ 100 here, and then place an exponential moving average 50 on a daily chart. You will see that we are trading around this level, and if we break below that, further bearish action should be expected. And it's likely to occur thanks to the fact that there's no further positive outlook then for positive outlook for the equity sector, especially from the FANG side. After Apple presented solid numbers, but nevertheless, there's no one out there who could now start to accelerate any speculation around positive outlooks for U.S. equity markets, in my opinion. So when looking at that, it means that there's a good and high chance that this setup here then in this case, so even though it's very, very rough, that this setup could become the truth, and that we haven't seen the bottom yet in the DAX, but that we can probably push below 12,400 points today. Yes, we want to have a look at GBPUSD now. By the way, now nevertheless, short and quick view here. That was also a setup, open range setup based on the Euro-Japanese yen. Yeah, similar to the one in the DAX. There was only different parameters, different time frame we're looking at here. But all in all, this is also an approach which over the in the next weeks probably you will also find on the website from Admiral. Then I will present such a setup here and what are the key parameters for such a trade. In this case, obviously you can see we broke out on the short side. Japanese yen currently strengthens. That has an way that indicates that there's kind of a risk-off tendency in the market, that currently there's an unwind of carry trades, by the way. That's why you're definitely happy to be long Japanese yen here. Now the question is, what do we get to see around the euro? I think there's plenty of potential on the downside in the euro too, and I just hope that the Japanese yen can present itself strong, while here there's a drop below 116 and probably push towards 115 in the upcoming days then in euro USD. But that's just an intraday trade. So currently I'm quite positive around this. I'm set up for euro Japanese yen. So just to show you here this trade and which parameters is it based on, or which idea it's based on. So it's an open range set or Asia breakout setup too. So now the question around GBPUSD. And the Bank of England. So the Bank of England currently, or today, is expected to hike rates with a probability of around 90%. So what we can say is that such a rate hike from the Bank of England is nearly priced in by 100%. No, it's definitely seen for sure. It's completely priced in that way. Let's put it that way. That there will be such a rate hike today. So the interesting thing now is when looking at GBPUSD, you can see that GBP can take on any bullish momentum here. So currently, really, it looks as if the push towards 130 is more likely than we get to see a sharp reversal here happening. And this is surprising because now some might say, well, usually you get to see a rate hike, and this is positive for a currency. And now the thing is, since it's fully priced in, there seems to be another driver, and one you should definitely remember today at 12 p.m. London. Here, market participants are not looking at the rate hike itself, but what they do is they look at the expectation, where they question what can we expect. They wonder what can we expect in the future after this rate hike. And here, the outlook is not as positive as it seems at first glance. So I think the UK economy is not as strong to justify for the Bank of England to hike rates from now on in a cycle similar to the Fed. But it will be probably a one-time event here. They will hike rates once, and then from there, wait for what will bring the Brexit negotiations. What will happen here in terms of the UK economy after the Brexit? And with this in mind, and since even if we only get to see a soft Brexit, the costs for the UK economy will be high enough to weigh negatively on the overall economic outlook, meaning that this should definitely be bearish for GBP, since the hike we get to see today will be something which traders call a so-called dovish hike. So that will be a hike which makes it likely that there will be no further hikes to come, but probably there will also be a cut. So we hike once today, and then we'll cut in the second half of 2018. That's probably a little too early, but in the first half of 2019 again. So a one-time hike, and then we cut again to have, yeah, or probably this is what the Bank of England aims on, to give itself some room to cut rates again. So with this in mind, the outlook for GBPUSD is bearish. Nevertheless, I don't want to give a setup for today, but what I want to do is I want to give an idea for the upcoming week. So I want to wait for this rate decision to happen, and I want to wait what is the market's reaction. And then from next week onwards, there is something which is also interesting from a so-called seasonal perspective. So within the time span from the 7th of August till the 13th of August, in the last 23 years, so we have a history of 23 years, in 19 of these years, so we had 19 winners, which means we had a hit rate of 83%. And the average gain of this winner was 187 pips. Yes, 87. And the average loss was 79 pips, with the biggest loss of 115 pips. So GBP CAD is definitely something to have an eye on, not necessarily today. Let's see what the market's reaction will be. If we look here at the GBP CAD there, you can see we are obviously trading within a key region, key support region. This is the region around the current yearly lows in GBP CAD. no, I'm sorry, that's not true, because here we traded lower in January. And this is the thing, if we break below this level, you can see that from a price action perspective, and if we only project this push, this progressive move here lower, that there's potential down to something like 63, 64 around this level, meaning there's enough room after such a break on the downside. And with the dovish stance, or a dovish hike from the British from the Bank of England today, there is definitely some room on the downside for GBP, especially probably against the CAD, and meaning that this seasonal pattern from next week, Tuesday onwards, could become a very, very interesting trading idea from a seasonal perspective. Then taking advantage of the fundamental developments taking place today. So this is my view on the Bank of England. Yes.
So we have to come to the end. The time is our limit every day, but for that 15 to 20 minutes, that is our goal. Tomorrow is another day. Tomorrow is the day trader of the day. 5 days a week, 5 different traders. If you'd like to see that again, a couple of hours later, it will be available on our YouTube channel. And if you like Jens Klatt's style, tomorrow we have a third special webinar in English about ESMA. We had already 2. Also them are available on our YouTube channel. And the third one, if you'd like to join us live, 10 o'clock CET, 11 o'clock EET, or 9 o'clock London time, wherever you are. English is our global webinar. So on admiralmarkets.com, at admiralmarkets.com, you can register if you don't know about that, there in the webinar section. And for today, thank you all the time, good trades, and thank you. Bye-bye.